So, do you think your down payment and the overall cost of the home itself are your only costs you're going to have when you decide to buy a house of your own? Let's break down the expenses that most first time home buyers miss. Real quick, I am not on the screen today because I am horribly sick with a cold, but I am in my seventh year as a full time Twin Cities realtor. I absolutely love first time home buyers and I love sharing the ins and outs so people can get a home of their own. If you learned anything new today, I hope you will join this growing channel. And if you have any questions about this topic, or any other real estate questions, please don't hesitate to reach out. I typically feel better than I do today. My contact info is below. And at the end of this video, I'll give you a quick Twin Cities market update for April 2nd. So I'm going to bring Molly Zimmerman on from Bell Bank Mortgage. I've had her on before. She's the perfect person to talk about some of these costs. And I would say the number one topic that I would say people do not think is common sense, I don't think it's understood enough, is these costs outside of the down payment and the price of the home. And the first one is closing costs, which she's going to talk to you about here in just a moment. And I will tell you it's kind of an abrupt transition. I apologize for that. But before I bring her on, one real quick thing is just this conversation about down payment. There's still a lot of confusion about how much down payment is enough. And I just want to warn you right now, the answer is it depends. I know that's not clear. And that is why it's so important you choose a loan officer or a lender early on in the process to make sure you are right on track, not just for getting pre-approved, but for getting answers to questions like the ones we're covering today. So like I said, I've got Molly here to talk about closing costs.
Especially when I meet with first time buyers, they tend to be prepared for that down payment. So they're thinking in their minds, I've got 3% for my down payment or 5%, whatever it might be. But they tend to forget that in a lot of cases, buyers do have to pay their own closing costs when they're purchasing a property. And what is that comprised of? Well, you've got your lender fees, of course. Every lender charges certain fees to get a loan through them. If you decide to pay a fee to buy a lower interest rate, that's also going to factor in. You've got third party fees, which appraisal, credit report, your flood certification. These are all things that we're required to have in our file as a lender. But you also have a title company. The title company will charge fees to search the property to make sure all liens, any judgments, all these things are paid off prior to you taking ownership of a property.
Right.
You also have the county involved. The county is also going to charge you fees at closing to record your mortgage, to record the deed. You've got mortgage registration tax based off of your loan amount. So these things start to add up. Then, in addition to that, we've got to set up an escrow account for future property tax and insurance payments. We also have to, in most cases, pay a full year of homeowners insurance at your closing. So a lot of costs are involved that buyers are just not aware of. And so when I meet with a buyer, number one, 100% of the time, I am going through them on a line by line item and explaining what every single fee is, because it's very important to know what you're paying. Secondly, that it just allows them the ability to know what to expect all in for closing. So if you've got 3% for a down payment, you might also have to expect on average, like let's say 3% for closing costs, but that can fluctuate. I mean, it can be 2 to 5%, but on average, let's just say about 3%. So suddenly you've got down payment plus closing costs, which is 6%, let's say on average, $300,000 property, you're talking about having $18,000 to cover all of those things at closing.
Right.
So it
Yeah.
adds up.
It does. And this is another reason why we always encourage people to reach out early, because to not know this and not be prepared for it, like it could just stop everything. And again, we've seen it so many times. People want to go look at houses and they're excited and they're pushing the buttons online to put these requests and completely unaware of these expenses. So this is just such an important conversation. So I'm going to talk about earnest money, which is, not the funnest conversation by any means. And I don't want to be too long-winded on this. So if I'm not kind of hitting everything and you're watching this video, feel free to reach out and we can talk about it more. But earnest money is sort of an old, older people than used to say like giving something in earnest. It's kind of like an old English term. So when you buy a house, let's say it's 300K, I always make the joke, it's like, oh, I'm fresh out of 300,000, but what I can give you is 3 grand. And will you hold the house? Will you take it off the market for me? And that's what earnest money is. It's just like people confuse it with down payment all the time because but down payment's down payment. Like they are two different topics because on the purchase agreement, the very first question is in 2 business days, basically, how much are you putting? What is this earnest deposit? And that is separate from down payment. Now, your loan officer will take that money and make it a credit either to your closing costs or to your down payment. It kind of depends on, the loan package and things like that. But so it's not really money you get back necessarily. Now, with the exception, of course, is you're going to have contingencies on your offer. And remember, contingencies is a fancy word for exception. So I'll buy this house except. So I'm going to buy this house except I want to get an inspection. So in the event you got an inspection, there were too many deal breakers, you just did not want to buy the house anymore, we would get you that earnest money back. That's not an issue as long as it's written in the contract and you have those contingencies set up. So the common ones, without babbling on too much, is inspection, your financing. So that would be like if you can't get a loan, you lost your job, something like that. If there was an appraisal issue, it's always smart to write in language for that. HOA, like if you're buying a townhouse or condo, that's another contingency that's very common. I'll stop there. So basically, if you're moving forward with the purchase, it's a credit. If you end up having like a gotcha along the way and it wasn't your fault, I want to be clear about that because let's say you go quit your job or you buy a truck or, something extravagant and you can no longer get a loan. No, you're not getting your earnest money back. It would be the right of the seller to keep that because, well, I guess to be kind of blunt, it's kind of like you've wasted their time. They pulled the house off the market. They get something for that. If you want to prepare for this fee, we'll call it, I would prepare for 1 to 2% of the purchase price. So a $200,000 house would be 2,000. That would be on the low end. 4,000 would be a little bit more competitive, especially if you're in a multiple offer. But there's no rule. I mean, technically, earnest money could be zero, but we just never see that. And I just don't think a seller would take your offer if you said, well, here's $100. I always like to think of this as like having skin in the game, having something. And again, if you've saved up money for your down payment, you're just taking a portion of that for your earnest money. And then the second thing you should be prepared for is that if you're getting an inspection, which of course I'm going to recommend, on the low end, I would say expect about $395. Now that is a true out-of-pocket expense because the inspector does not care whether you move forward with the purchase or not. Their job is to tell you what they see on the house that looks problematic to warn you. They don't take it very kindly if you said, I would like my money back. No, thank you. That's a service that they're providing you that they don't see as a part of the transaction, of course. So 395 is the lowest I've seen. 5 to 600 might be a little bit more typical, and then it goes up from there. So a person can always check the sewer lines. That's another about 250 for most companies. If you had a wood burning fireplace, that would be another 250 to check and make sure you don't have a chimney issue. Radon inspection. So any of these add-ons. So I say on the low end, 400. Maybe 1,000 if you sort of wanted to deeply investigate a property. So again, very much a true out-of-pocket expense. And then one more I'm going to bring up is the appraisal. This again is assuming you're getting a loan. So if you're paying with cash, you don't have an appraisal. But after the inspection is cleared, the lender will typically order the appraisal pretty quickly after that point. Most lenders will tie that fee into your closing costs so you don't have to pay for it until closing. However, not everybody works that way. Not everybody's going to be comfortable with that because they're going to charge you for the appraisal whether you buy the house or not. Most lenders are not going to want to pay for that out of pocket themselves. And I always tell people to prepare for about $650. That's not to say it might not be like $500 or $700, but that kind of gives you a range for preparation. It is a fee. Again, nobody wants to pay for it for you, but it can be tacked on the end depending on the lender and loan officer you end up choosing. So sometimes people who are very tight on money, I do encourage them to ask their loan officer so there's no surprises because you don't want to get through inspection period, they say, okay, I'm going to order the appraisal. I'd like, $700. And you're saying, I just don't have it. Okay, now we have another problem. So you can, be forward thinking on that. What are some other expenses we haven't talked about yet?
I mean, I think a big one is just moving in general. Like, are you going to hire movers? Are you going to rent a truck? Do you have to take time off of work? And are you going to get paid when you take that time off of work to make that move? I think just like setting things up ahead of time, being ready for it, budgeting a little bit extra, really will help make the process a lot less stressful for you.
Yeah, absolutely. Like we don't the part of the job that we're doing is the front end and like throughout. So we're not necessarily like we're not gonna be able to tell you like how much a moving company is and like what it's gonna cost to buy new furniture and things like that for your house. But you need to be prepared that there are going to be more expenses. Maybe there were things that came up on the inspection that you feel like you need to deal with as soon as you move in. Like I think there's just a lot of other miscellaneous things that should be considered. And I'm trying to find the word here. Like I think we shouldn't be like overconfident that there isn't going to be other expenses. Like, I think you have told me a story in the past where you moved in and you like immediately had some was it pretty major housework? What was it again, Molly?
So we had a microwave, refrigerator, and I think our hot water heater all went out in a short period of time. So I mean, it happens, right?
Yeah.
It's no fault to the seller. It was time for them to be replaced. So be ready.
Yeah. And so you did get an inspection, right?
We did, yeah.
Yeah, so that's a perfect example of, I got the inspection. We just didn't know these things were all on their last legs. It's unfortunate for you guys as the first or, the next people in line. So that doesn't mean like there's something to go back and like put a demand on the seller for not disclosing or sharing. I mean, I've had like the spring on my garage door just suddenly, and like your car will be like stuck in your house if that happens. Again, the water heater can kind of die at any point. And not all these things are like equally the same amount of money. Like a furnace going out is, a far different expenditure than actually like just a water heater itself. So yeah, you have to kind of I always say with real estate, we sort of have to prepare for like every what if, which is, it's really hard. It makes it stressful and emotional to do that. But obviously, the more financial cushion you have, then when those things come up, if they come up, hopefully they won't, then you're just more prepared. So maybe to wrap it up today, I just want to make it clear to anybody that is hopefully still with us. We are happy to answer all these types of questions for you if you have these things on your mind. We have a wonderful smart home buyer book that it's on my website. You can download. I won't even know you're downloading it. You don't have to give me your email. There's no strings attached. It's an amazing resource for buyers. But we are always here to take phone calls, set up Zoom meetings, have coffees. Like we're just happy to answer the questions with like absolutely no intentionality of buying a house, just to get those answers out there for folks. So our link is below if you need to get a hold of us. Thank you for joining me again today, Molly.
My
Yeah,
voice.
thank you.
Let's look at this market meter. Notice the arrow is at a 7.22, and last week it was at 6.83. This definitely puts us in that moderate seller's market. And so, with it being April 2nd, we're really at that peak point of where if we're trying to buy a house, we have to understand we have the most amount of competition. And it's going to stay this way for a few weeks. And it'll kind of start coming down slowly in May and even slower in June. So if you really don't like what you're hearing, what I'm saying, you can wait. The downside is less houses will be on the market to choose from. And so it's sort of a pull. And so some people, I just say, go out there and get started. Just kind of understand that depending on your price point, depending on what you're buying, you really need to expect to go into some competition on properties. It's not the end of the world by any means. Get yourself a good buyer's agent who knows how to help you structure the deal together and do your best with it. And let's move on to just kind of overall. And I guess I should say for sellers, this is the time to sell, right? But of course, saying that, if you're nowhere near ready to like put your house on the market, you don't need to be upset about that. But again, we are at that peak for getting, you know, top dollar and the most amount of eyeballs on your property. So showings per week per listing is at 5.84. You can see last week it was 5.62. Weather does play an impact on these things, but overall, 5 to 6 showings per week per listing. Now remember, this is the 250 to 500K range. So if you're looking at properties higher than this or lower than this, it actually moves at a different pace. So 5 to 6 showings is normal if you're selling a house. Might be higher than that your first week on the market. Notice it says total showings and all price points per week change. So 9% over a week ago, 15% up over 30 days ago, and even more. So if we go back further in time, this is something new they added to our data. Inventory of homes has gone up. Like I said, a lot of people are buying, but a lot of people list at this time of year, so it goes hand in hand. Days on market has come down quite a bit since I last looked at this data. We were at like more like 30 days. Now we're down to like about 25. Even noticed last week we were at 28. So again, we're at that peak point where houses are selling quickly. Notice interest rates have come down. A year ago we were at 7.05. Today we're at 6.74. That's very much dependent on what type of loan you get, which lender you're working with. Please don't take this as like an end all be all, but if you're just trying to run like generic numbers on a mortgage calculator for yourself, plugging in something a shy of 7% is a good way to run your numbers. And then of course, like once you find a house, you'll lock the rate, and it's hard for me to tell you exactly what things will be at that point. Not a loan officer, and I'm not representing a particular bank. I do hope this information was helpful. If you have any questions for me about real estate, please don't hesitate to reach out. My website is iheartmplsminneapolishomes.com. I always welcome hearing from you, or you can just use my website to start searching houses or learn more about the selling process. Have a fantastic week. Thank you.